On April 30th, 2026, President Trump signed an executive order that could permanently change how tens of millions of Americans save for retirement. And most people are going to hear about this too late to take full advantage of it. This is not just a policy change. This is a structural shift in how retirement savings works in America. And for the financially savvy, it is also creating a specific set of investment opportunities that most people are not even thinking about yet. Today, I am going to break down exactly what just happened, what the Trump IRA actually is, how it compares to your existing 401k, what it means for your wallet, and most importantly, what it means for the American stock market and the broader economy going forward. Welcome to Wealth Analysis Network, the channel that delivers deep, honest, research-backed financial analysis, so every person watching understands what is actually happening in the American financial system before they feel it in their wallet. If you are new here, subscribe right now because every single week we bring you the kind of analysis that most financial channels either do not go deep enough to provide or do not get to until after the window of opportunity has already passed. Today we are analyzing the Trump IRA executive order, what it is, who it helps, what it costs, and what the broader economic and investment implications are. Let's go through every layer of this right now. Let's start with the problem this executive order is designed to solve, because understanding the problem makes everything else make sense. Right now in America, there are approximately 56 million workers who do not have access to an employer-sponsored 401k plan. Not because they do not want to save for retirement, but because the 401k system in America has three fundamental structural limitations that have excluded a massive portion of the workforce from one of the most powerful wealth-building tools in the country. The first limitation is access. To participate in a 401k, your employer must offer one. If you work for a small business, if you are an independent contractor, an Uber driver, a gig worker, or a part-time employee, there is a very real chance your employer offers no retirement plan whatsoever, which means you have been locked out of one of the most tax-advantaged investment vehicles available to American workers. The second limitation is fees. According to recent data, the average 401k fee in America is currently 1.26% annually. That number sounds small until you do the math. If you invest $500 a month for 30 years at an 8% return and pay 1.26% in annual fees, you retire with approximately $540,000. The same investment at 0.15% in fees produces roughly $660,000. The difference is $120,000, gone entirely to fund managers who were not building your future, they were billing it. The third limitation is portability. When you leave a job, transferring your 401k to your new employer's plan is a complicated, friction-filled process that often results in people cashing out their retirement savings, paying taxes and penalties, and destroying years of compounding in a single decision. This is where the Trump IRA comes in. President Trump signed the executive order on April 30th, 2026, directing the Treasury Department to establish TrumpIRA.gov, a federal platform designed to connect American workers who do not have access to employer-sponsored retirement plans with high-quality, low-cost private sector IRA accounts. The website is scheduled to go live by January 1st, 2027. And the structure of what it offers addresses every single one of the three limitations of the traditional 401k system. On access, any worker in the United States qualifies to open an account through TrumpIRA.gov, regardless of whether their employer offers a retirement plan. On fees, the executive order requires that all IRA products listed on the platform maintain a net expense ratio cap of 0.15%. with no minimum account balance and no contribution minimums, improving access for smaller savers. You can start with as little as $5. And on portability, because the account is tied to you as an individual through the federal government and not to any specific employer, it moves with you regardless of where you work, where you go, or how many times you change jobs in your career. Now let's talk about the part that has generated the most attention, the government match. The Trump IRA offers federal contributions of up to $1,000 per year derived from the saver's match. a federal program that takes effect in 2027. It grants a 50% matching contribution on the first $2,000 that an eligible low to moderate income saver contributes annually to a qualifying retirement account. To qualify for the full $1,000 government match as a single filer, your income must be below $20,500, and you must contribute at least $2,000 into your account during the year. Single filers with annual incomes between $20,500 and $35,500 qualify for reduced matching contributions. Joint filers making up to $71,000 can qualify for a reduced match. If your income exceeds these thresholds, you do not qualify for the government match, but you can still open an account, still benefit from the 0.15% fee cap, and still access the portability and no minimum features of the platform. Now let us be intellectually honest about something that most coverage of this executive order is glossing over, and that is the economic cost of this program and what it means for every American whether they qualify for the match or not. The United States government currently collects approximately $5 trillion in taxes annually and spends approximately $7 trillion, running a $2 trillion deficit that is funded entirely through borrowing. It is estimated that approximately 32.3 million workers would enter the retirement savings system under a federal auto-enrollment plan after accounting for opt-outs. The projected new capital flowing into the stock market as a result of the Trump IRA is estimated at between $32 billion and $68 billion. That is a significant amount of new investment capital. But the government matching funds have to come from somewhere. And with tax cuts already signed into law through the One Big Beautiful Bill Act, raising taxes to fund this program is not on the table. That means the funding comes through additional debt. And additional debt at scale means the Federal Reserve will be called upon to provide more financing, which ultimately means more money being created, which means inflationary pressure on the purchasing power of every dollar that ordinary Americans hold in savings and earn in wages. This is the dual reality of the Trump IRA that financially sophisticated people are processing. On the beneficial side, millions of Americans who have been structurally excluded from tax-advantaged retirement savings now have a clear, accessible, low-cost path into the market. That is genuinely good for financial inclusion and long-term retirement security. On the economic side, the mechanism that funds the government's matching contribution is the same mechanism that has historically transferred wealth from wage earners and savers toward owners of assets and investments. When more dollars are printed and injected into the economy, asset prices tend to rise while the purchasing power of cash and wages declines. The people who benefit most from this dynamic are the people who already own the assets that inflation makes more valuable. And the signal embedded in the Trump IRA that the government intends to push more capital directly into the stock market is a signal that financially aware investors are paying close attention to. From a pure investment opportunity perspective, the implication is straightforward. More money entering the stock market systematically, from new investors opening Trump IRA accounts, from the government's matching contributions, from the expanded access bringing tens of millions of new participants into equity markets for the first time, creates sustained buying pressure on American equities. That does not mean markets will only go up. Market corrections will continue to happen. Volatility will actually increase as more participants and more printed money enter the system. But the directional trend of more capital chasing the same pool of American stocks is a signal that investors who understand supply and demand dynamics will factor into their long-term positioning. Broad market exposure through low-cost index funds that track the total American stock market or the S&P 500 gives any investor, at any income level, direct participation in the asset price appreciation that this increased capital flow is likely to support over time. The bottom line on the Trump IRA is this. For the 56 million Americans who currently have no access to a tax-advantaged retirement account, this executive order creates a real and meaningful opportunity starting in 2027. Low fees, no minimums, portability, and for those who qualify on income, up to $1,000 per year in free government matching contributions. For investors at every level, the broader economic signal is clear. The American government is systematically pushing more capital into the stock market, and the people who are already positioned inside that market are the ones who will benefit most from the flow that follows. Understanding how the system works, not just the surface level of what the policy says, but the deeper economic mechanics of what it produces, is what separates the people who win in the American financial system from the people who simply participate in it without ever fully understanding what they are participating in. If this analysis gave you a clearer and more complete picture of what the Trump IRA actually means for your retirement and for your investment strategy, please give this video a like and share it immediately with someone who needs to understand this before 2027 arrives. Subscribe to Wealth Analysis Network if you are not already part of our community, because every single week we bring you the deep, honest, research-backed financial analysis that helps you understand the American economic system before you feel its consequences. Drop a comment below and tell me, are you planning to open a Trump IRA when it launches, and what is your biggest question about how it works? I read every single one. See you in the next video.